Thank you. We're gonna call the pension meeting to order. At this time, our money manager, Tim's gonna give us an update on this, very interesting market that we're in. As long as it goes up, it's interesting. Okay.
Well, at least we're lucky about that for now. Nick, I just want to mention that, how do you want me to handle the other, I want to talk about the other transaction that you're aware of, just want to, at the end, or?
Yeah, no, we'll talk about this at the end.
Okay,
Yeah.
perfect. All right. Well, good morning, everybody. Wonderful to be here with you. I want to provide a couple overarching comments before I run through the report. So Nick set me up here saying an interesting market, and we've certainly had in the third quarter, so July to September, a broad market advance in many different asset classes, which is certainly a positive development after having such a narrow leadership for a number of years. International has done well, but we've had such a long time period when just large cap stocks are outperforming. It's nice to see the market broadening out. And we've also had very good fixed income returns as bond prices have moved up as interest rates and yields are moving down. What has been behind the strength in the capital markets or the equity markets? It's a couple different things. One is that companies seem to be weathering the economic storm that we've been in, especially related to tariffs, much better than expected. That could still, the pain could come home to roost later, but for the moment, we've seen some better than expected earnings, and companies are giving reasonable guidance. So that's certainly been supportive of capital markets. The other positive development, and it's this crazy conundrum within Wall Street that bad news is good news. And the market seems to like that at the moment. We've certainly been in periods like that before. We've seen a little bit of a weaker labor market. So job growth has not been as strong as it has been in the past. We're not seeing big layoffs anywhere necessarily, but just more isolated. But definitely not as much hiring as in the past, and especially coming out of COVID. So that has given the Federal Reserve the go-ahead, if you will, to be able to lower interest rates because inflation has been fairly stable. And we saw that today. I heard the report for inflation came out a little bit better than expected. It's still higher than what the Federal Reserve would like. They have a 2% target. It's been a 3% for the past year or so, but it was expected to be a little bit worse. So that opening allows the Federal Reserve to cut interest rates. They cut them in September. There's an expectation of a couple more this year and into next year that could bring the Fed funds rate down to somewhere in the 3% range. So that has been a catalyst for this broadening of the stock market. Better returns out of small cap stocks. You'll see that in the report. Small caps.
Jim, the one thing I want to mention to the board is that, you're borrowing money, that's great for interest rates, but from Melissa's side, as we invest money with U.S.
Correct.
Treasuries, okay, we will see that, and she's probably already saw it when she reports out where those interest rates will
Correct.
come down, so we'll make less money on our money. I just wanted to throw that in for the board.
Yep. So that's exactly right. So from that perspective, though, the balance sheets of small cap companies look more attractive because their lending rates are going to be better. So that improves their balance sheets. So that's where we've seen this recovery. So we've had a great run in the market. When Bob sat down, he said, when's the correction coming? We have no idea. There will be a correction. We all know that. But the thing for investors to think about is that in situations like this, you could have two extremes in how you react. You could want to emphasize your portfolios and all the stuff that's really been going up and overemphasize that too much, or you could become too fearful and get out of the market and be concerned, be worried about those returns. For long-term investors, whether you're a organization, the pension plan, Alesco manages our clients' portfolios to be balanced, to be able to move through lots of different types of market environments. We look for quality and reasonable valuations in all of our portfolios. The exposures that we have, we think, are very prudent for where we are now, and that's how we've managed money for 26 years, and we continue to do that. This is a little data point that I know Nick likes to follow. Through the close of trading yesterday, when we add up the value of all the pension accounts, it looks like you've crossed 100 million between all three of them. So it doesn't show that in end of
Thank
September.
you for answering my question there.
I knew you were going to ask that,
Okay.
having it come up a couple of times. So that's certainly a milestone, and I wanted to share all that with you. We'll run through the report. I'll focus in my comments on the non-salary plan. As you know, all of them are managed in the same way. So the performance and the allocations for each of the other plans is very similar. So most of my comments will be focused on this non-salary plan. The asset allocation at the end of September was 66.8, and you can see that's in the middle of the range, maybe towards the top end of the range of the investment policy. We manage it to a target of about 65% equity, so we've had some good markets, and you're just a little bit above that target, but nothing within the range of where we would look to rebalance. The remaining 35% of the assets are in fixed income. Blue is the broad bond market, and the purple are treasuries, inflation-protected securities, government bonds where the principal and interest is adjusted based on CPI. This has been a great fixed income diversifier over the last couple of years. How is that 66% equity allocated on page 2? We have been consistent with this equity allocation over the past year. We haven't made any adjustments to it given the performance of the capital markets. The international equity is broken off on the side out of the pie. You can see that as 30%. That's been by far the best performing asset class this year. And the conventional wisdom at the beginning of 2025 certainly would not have predicted that. So that's another point about being diversified, holding assets that have positive relative value. International has done quite well this year. We'll see that in the performance. Large cap stocks is the bigger portion of the portfolio in terms of all your assets, about 47%. And then we push money down the capitalization spectrum and into value, both in small cap and large cap. The small cap and emerging markets were the best performing asset class this past quarter, as we talked about, based on the US dollar and the improvement in potential interest rates for small cap stocks. We're not planning any changes to the allocation. We think the valuation spreads that we have among the different asset classes is appropriate for the period that we're in. We don't know that large cap stocks are going to do worse than the others, but we have this nice broad portfolio for that perspective. If we go to page 3, take a look at the roughly 25% in fixed income. This has been a very consistent holding since we decided to neutralize our duration in fixed income about 3 or 4 years ago. We have about a 5.8-year duration, so it's certainly an intermediate core. This portfolio is yielding about 4.1%. To your point, Nick, about falling yields, a year ago, these were about 5%. So yields have definitely come down, but we're still emphasizing quality in this portfolio, overemphasizing government bonds, and kind of reducing our emphasis on corporate and mortgage-backed securities by that treasury component that we have in the portfolio. Given the fact that interest rates might be going down, we're not expecting to do anything with the duration in this portfolio because the long end is likely to be pretty consistent, is what our expectation is in terms of the yield curve, longer dated out, 15 and 30 years, which we have exposure to here because of some of the concerns about the U.S. debt and obviously higher levels of longer term inflation. So we're going to remain consistent with this fixed income portfolio into the end of the year. Lastly, just from an asset allocation perspective on the TIPS portfolio, we have it split between long-term and short-term TIPS. Long-term TIPS have a duration of about 7 years. That's a fairly long duration, so we include the short-term TIPS in there. That brings everything down to just a little bit over 5 years, so that's an intermediate term. But TIPS have been a great performer based on the inflation expectations of the market. We expect that to continue. When you think about TIPS, they have outperformed the bond market for the last several years because inflation has been much stickier, and I think that's going to be the case. I mentioned today's inflation report was a little bit better than expected, but we're still running a full percentage point above the Fed's target, and that doesn't seem like that's anything that's going to be going away anytime soon. For performance, we go to the next page, take a look at that. We've been fortunate enough to have a nice, reasonably long time period here of history with you going back to 2020, so you have lots of different time periods here. I'll kind of run through it quickly and focus more on page 6 when we get to performance to see the index performance. But at the end of the quarter, it's 9/30, the non-salary plans value was $43 million. You had a gain of $2.2 million at the end of that during the quarter, and a return of 5.39%. We've talked a little bit about the markets. You're up almost another percent here into October, 43.5, a little bit over $400,000. And that brings the year to date through the close yesterday to about 13.5%, above the 12.4% we saw at the end of the quarter. When you look out for the full year, you've got an almost 11% return, 10.9, $4.3 million gain. And then the long-term returns, the last 3 years at 15%, that's an exceptionally strong portfolio return for 3 years. And it points to all the challenges. I mean, when you think about, even when you go back to the inception, this portfolio started right before COVID. We've had 2 bear markets, an increase in interest rates that was 500 basis points. Being disciplined and sticking with an allocation has certainly benefited the pension plans here for Centro. And your long-term return, and again, long-term is relative here with just over 5 years, 8.75%, and the expected return for the portfolio, or excuse me, for the pension plan is 7%. So we've had very good returns that meet your long-term rates of return for, and that's very healthy for the plan. A couple of things real quick on page 6. I'll start with just the quarter performance, just to highlight the change in leadership in the market. You can see that in the small cap stocks, it wasn't quite the best performing, but the S&P 600 at 9%, and then emerging markets at 10.6. That's a little bit in terms of the emerging markets. It's the dollar, U.S. dollar continuing to be weak, and some, I think, excitement in some of the emerging markets technology stocks related to the AI craze, which certainly has infected the U.S. market, playing out a little bit there. Taiwan Semiconductor is one of the big companies in that index. They've certainly benefited from that. But you can see the quarter, really a broad-based return in terms of all the asset classes. It was a very good quarter. If we go to year-to-date, I want to highlight that your diversification in terms of the asset class performance has helped the portfolio equities. That's the gray line at the top of the page at 16%. Outperformed the S&P 500. That's not a goal that we have necessarily for portfolio performance, but that international returns of 27% for emerging markets, and then the MSCI EAFE at 25%. That's the developed international markets. Europe, Japan, Australia, the big international countries have really outperformed the U.S. At really 10 percentage points better. And that certainly, as I said, was not expected this year. The reasons behind it is the U.S. dollar has weakened about 10% at the end of the quarter. And we've seen structural changes in some of these European countries. Spending patterns different, focusing more on growth. Some of these countries starting to think about borrowing money to help grow their economies. All that has sort of changed. And having underperformed the U.S. market for a number of years, the valuations are quite attractive. So there's certainly some wind behind those sales in terms of those asset classes. When we go out further, just to quickly look at the top line returns, 15% this past year over year, those are great returns. And that equity return, 21.7%. That's over the last 3 years. That's really kind of incredible. And it's the market recovery coming from that really poor year of 2022 when both stocks and bonds were down. We had bear markets in both bonds and stocks. So investors that are disciplined, rebalance, you can see how much recovery you can get in a fairly short time period. And then your long-term equity returns are at 11.3%. I just want to highlight, when we look at fixed income, you're seeing some mid-double-digit returns there when we look at fixed income and real return together. 5 and 6% returns. That's the wonderful contribution now that as we've sort of normalized interest rates, that fixed income is providing some help to total return. And when we think about real return assets, you can see over the 3 years and back to 5 years, they've outperformed the overall bond market. That's that inflation component working to diversify the fixed income holdings, even as interest rates have come up because inflation has been so strong. That's the reason that we have those in the portfolio. And finally, one last little piece of data to show you. We've looked at your overall performance. We've compared it to the indexes to see how the different asset classes have performed. But this is some OCIO data, and OCIO stands for Outsourced Chief Investment Officer. In effect, that's the role that Alesco plays for the pension plan. We are your discretionary asset advisor, and this is a database of institutional assets that are managed by other investment management firms, and it's calculated by the NASDAQ stock market and brought together by a consulting firm down in Atlanta. These are big accounts, $50 million or more, all discretionary, and there's fees paid, so this is net of fees data in terms of the returns. It's a comparison of how other managers are delivering returns for their clients and the way the pension plans are compared to it. The data is a quarter lag, so we don't get this on a timely basis. Your report was 9:30. This is data as of 6:30. So your returns are actually as of 6:30 here. So you can see across the board, you've got very favorable returns, especially longer term. We compare you to what other defined benefit pension plans have done. That's the first line. And then what your asset allocation is as a comparison to those other managers. And we're looking at 400 or 500 different managers managing in these particular asset classes and spaces. And you've got very favorable returns to what these other managers are doing. We don't have a viewpoint into what the asset allocation is for the DB plans, so it's just the aggregate of how they do. But you can see you've done very well against your range of asset risk profile. So as fiduciaries for these pools of money, I think you should be very pleased with these results and how well the pension plans perform versus other types of assets managed in the same way. Any questions at all about non-salary plan or the asset allocation? All right, so your holdings are on through page 9 on that account. And so if we can jump to page 10, I'm going to go through these very quickly just because they're all managed the same way. You can see the equity is at 66 for the salary plan, same as the non-salary. If we go to the next page on 11, the equities are allocated in the same way, so the same story about international versus domestic. Page 13, fixed income, that 90-10 mix between the intermediate core bond fund and the intermediate government fund, and 65-35, roughly 64-34 for the TIPS portfolio on page 13. All the allocations are the same. We come to performance on page 14. You can see too, as we look across the board, the same history going back to January of 2020, and that same trajectory of performance, strong quarter, 5%, 12% year to date, and long-term returns that exceed the 7% return or expected return for the pension plans. And the value, just to get it on the record, $42.4 million at the end of September. Salary DB plan, page 15, all the indexes, you can see the same time periods, performance is going to be the same. And then for page 16, you can see the comparative performance versus other managers and your allocation in the OCIO database, also very favorable. And then tab C, the last holding, we can look at the Utica plan. Managed in the same way, allocation of 66% equity, 35% roughly to fixed income, and a little bit of cash at the end of the quarter. 66% of equity on page 20, allocated in the same way, 70-30 between domestic and international. Fixed income on 21, same, as well as TIPS on page 22. Finally, you can see for performance, the Utica plan had a return of 5.4% in the quarter, $703,000 gain in value at $13.7 million at the end of the quarter. You can see that the same holds true for the index performance and the comparative performance as well, attractiveness in the time periods that we show.
Tim, just make another comment. Euro Pacific lags for a number of years.
Correct.
this year, something's going on, I don't know if it's hurricane or whatever, the water's moving, but you're looking at 20 to 30% sometimes, of what's going on.
So I mentioned that very quickly at the top, but I'll emphasize it a little bit more. So there's a chart that we have. Why don't we look at that? It'll actually help. Could we go to page 37 at the end of the report for those here in tab D, page 37. So this will be just an example here. I'll get to this in a minute, but this shows you first the valuations. You mentioned the lagging part of it. The U.S. stock market, particularly large cap stocks, for really you go back, we don't have the history with you, but if you go back to really since the financial crisis, it's been 12 to 14 years that the U.S. market has outperformed. So that means that the price of the U.S. stocks has gone up probably more than earnings in some ways, but it's been in lockstep. If you look at the developed international world and the emerging markets, this shows you the valuation data of those asset classes. It's all down towards the bottom of the range, so below the median. This is the price to earnings ratio for the last 15 years. That shows that the international markets had been depressed from a performance standpoint, and they're much more attractively priced in terms of future earnings. So that sets the stage for what's been happening. The U.S. dollar has weakened over the past year, down about 10%. That makes those earnings of international companies more valuable in U.S. dollars. And then on top of that, there's been some structural changes in many of these international countries. Japan has a new prime minister. They're thinking about, I'm going to say, taking on some debt and allowing a little bit of inflation in their economy. They were the best performing economy through the early 1990s. They got into a land problem, speculation in real estate. They really overextended themselves. So they've had a 20, 30-year period where they've underperformed. That maybe is starting to change. Europe, again, the same thing, underperforming economies for some time, but based on some military spending situations, focusing more on growth as their population has aged, and fundamentals. We've seen just better performance out of some of those companies. So there's a lot of things that are going on there that the market didn't have visibility into at the beginning of the year. And that's another data point about why you want to have holdings in lots of different asset classes, because no one predicted that, but yet you've got 25% return.
I agree with you on the diversity.
Exactly. So I know you've got a lot to cover today. There's lots of information in our capital markets review. I'm happy to answer some questions, but this might be the appropriate time to address the transaction.
Tim and Jim have been doing a lot of good work for us over the years under Alesco Advisors. And I think sometimes when there's opportunity and to better themselves, that lends an opportunity for action. So recently we were called here at Central, Chris, myself, and the team about another partnership. So I'm going to turn it to you to get into that detail part of it.
So Alesco Advisors has agreed to be acquired by a large credit union in Rochester, ESL Federal Credit Union. The impetus for this is that our company is 26 years old. Jim Gould comes to the meetings with me regularly. He sends his regrets today, wasn't able to come, but he's been our majority shareholder for the last 26 years. I'm a shareholder of Alesco. We've wanted to solidify the long-term ownership structure of our firm, and this is a way for us to do that. Jim doesn't have any intention to retire. He wants to work for another 5 to 8 years till he's in his mid-70s. He wants to be working when he's Julius's age. So he's got no intention of retiring. I'm not leaving the company. That was part of the impetus. Besides setting up the long-term ownership structure of the firm, we wanted to be able to keep Alesco and serving our clients the way that we have been. We did institute a formal process to look at lots of different options this year. all of them involve some kind of compromise, whether that be related to our investment philosophy, the fees we charge clients, but most importantly, that would affect how we work with our clients. Also, our staffing levels. You know, if we were acquired by a big bank or something, or another investment firm, the investment team in Chicago will handle everything, and our portfolio managers would be redundant, that kind of thing. We love the team that we've created, and we want to keep it together, and that was important to us. So ESL, I don't know if any of you, they're not a Syracuse company, but they have a footprint that's a little bit bigger than Rochester. They've got well over 100 years of history. They were originally Eastman Savings and Loan. They were the Kodak Savings and Loan, founded by George Eastman in 1920. So they've got a huge, long history in Rochester. In the mid-90s, they changed their charter to become a credit union. They are community-minded, very much like us, and they want us to remain independent, even though they will be the controlling shareholder of our company. And that works. When you have a for-profit company and a nonprofit, we will be a new LLC. So they're going to create a new LLC. Alesco will eventually, our LLC will be retired and will be part of this new LLC, but nothing changes.
Tim and Jim assured me
Yes.
that nothing will change as far as business as usual with the relationship.
Exactly.
They will still be here, they're the point people, they will be presenting. It's their responsibility, this account, and
That's exactly right. Fees don't change, the name doesn't change, our location doesn't change. We'll be here on the last Friday of every quarter to meet with you and deal with, the staff in between.
I'm truly not surprised. I was on an advisory board for a wealth management firm some years ago out in another area, and similar thing happened. And also another few things I've been involved with on the finance side, so this is part of the times.
And we're
for succession, I think, too.
correct. The succession was important, and to ensure that we have a long-term ownership structure of the firm, and that there will be synergies and benefits that they'll bring to the table too for us. And we bring a OCIO wealth management strategy to that firm, and connection to corporate clients that they may not have. So there's a benefit both ways, but we didn't want to change, and this is a way for us to do that and keep everything the same and serving our clients the way we have them.
Any questions for Tim?
You guys are custodian.
No, we are not. So our custodian won't change. You have NBT Bank. As long as you want to keep NBT Bank as your custodian, that will stay the same. Other clients that we work with are Fidelity or Schwab or some other custodian. That doesn't change at all. So the relationships that we have remain exactly the same.
Very good. Thank you, Tim, for everything, and please continue to work hard for us.
Great. Thank you for the trust you placed in Alesco, and we value our relationship with you.
Thanks, Tim.
Thank you.
Thank you. Good job.
Thank you.
You can all put it right into it.
Just do it.
We're gonna go right into our audit and finance committee. Just wait for Melissa for a couple of things to take care of the IT. Julius, you're in charge of the IT here, right?
Come on over, Jill.
You don't want me to do this.
It's better than the name charge.
Yeah.
I can't turn it on.
Bob, you're his backup.
Thank you. Is that more pay?
No, still doesn't pay.
Welcome to our audit and finance committee, everybody. And once again, we don't have a big agenda here, but we have some things that need to get accomplished. At this point, I'd like to turn it over to Melissa to look at our second quarter financial statements.
Good morning, Mr. Chairman, members of the board. So I am battling at the very tail end of a head cold, so you'll have to bear with me. I already gave Chris a heads up. If I start coughing, he's taking over. It's all written here. So we're going to jump into our statement of net position. As of September, the quick ratio is 7.37, which is just below our quick ratio of this time last year of 8.01. Our current assets are 64.5 million, reflecting a $5.9 million increase compared to September of 2024. Current liabilities total 7.5 million, that's reflecting 1.5 million or 24.5% increase compared to September 2024. More detailed about our current assets. Cash and cash equivalents total 44.5 million. This does represent a $5.4 million increase compared to last year. Receivables and accruals total 10.6 million. This has increased as well of 1.4 million. Operating assistance increased 3.6. Mortgage recording tax increased by 290,000, and trade receivables increased by 910,000. This is being offset by grant receivables are down 3 million. And although our receivables have increased this compared to last year, our customers are still in good standing. Materials and supplies total 3.7 million. This is a decrease of 370,000 compared to September 2024. And prepaid expenses and other current liabilities total 5.8 million, reflecting a decrease of 737,000 compared to last year. And this decrease is primarily due to the cash collateral we received back from travelers at the end of last fiscal year. Any questions in regards to our current assets? Our current liabilities total 7.4 million or 7.5 million, with accounts payable and accrued expenses totaling 2.4 million. This does reflect an increase of 388,000 compared to last year, and that's primarily just due to timing of processing of vendor invoices. Accrued salaries and liability benefits balance 3.9 million, reflecting 810,000 increase compared to last year. And this continues to be impacted, or the cause of it is the implementation of GASB 101, which is the compensated absences that was implemented at the end of last fiscal year.
So remember, folks, compensated absences is all this time off that people have earned. And what we do every year is we take a look at it and we post it as a liability. So, people have time, it's earned, it's posted as a liability. So any time if they leave, it's already accounted for.
And the change that happened at the end of last fiscal year, we've always been doing that, but the change in the GASB rule was to also accrue for the tax liability associated with those absences. So that was primarily the increase. Estimated claims payables total 1.1 million. This reflects a $247,000 increase compared to last year. And this is due to the IBNR adjustment at March 31st, 2025. Any questions in regards to liabilities?
The INDR is incurred but not.
It's incurred but not recorded.
Correct.
So health insurance that, there's always a lag with doctors sending bills to the insurance. So it's like what we expect to still be out there that is not completely known. Any questions on the balance sheet? Moving into the statement of revenues and expenditures. After 6 months ending September 30th, the authorities report the consolidated operating income of 2.6 million. This excludes capital contributions and non-operating expenses. Operating revenues are 6.5% over budget, 9.6% over prior year, and 17.8% over fiscal year 24. So our operating revenues are performing very well. This favorable budget and prior year variances are associated to ridership gains across both fixed route and demand response services, and that increase average is about 7.6 year over year. Special line revenue favorable performance is largely a result to scheduled and unscheduled contract rate increases, as well as higher demand for contracted services, in addition to the ridership at the Great New York State Fair that exceeded our projections and prior year. advertising and other, that is in line with budget and in line with prior year. Any questions on our, revenues? As of September 30, operating expenses total $46.9 million. This represents a $4.6 million increase compared to prior year. Current year expenses are performing $3.8 million under budget expectations, and personnel expenses total $32.3 million and are performing $4.3 million or 11% under budget, but are $1.3 million over prior year. Again, our we anticipate our expenses to go up, so that is normal, and we are performing under budget because those personnel expenses are assumed that all positions will be fully staffed for the entirety of the year, and that hasn't happened as of now. Non-personnel expenses total $14.6 million, and are performing 2.3% under or below budget expectations, but are 28.5% higher than prior year. All non-personnel expense categories are performing at or below budget, with exception to risk. The risk variance is contributed to both the premium costs for our self-insurance claims as well as a claim from a prior year in our auto GL policy. On a year-over-year basis, most personnel expenses categories are showing both anticipated and unanticipated variances. It's expected that we anticipate that expenses will grow year over year, but the things that we didn't expect are both in our purchase transportation and our materials and supplies. In regards to purchase transportation, we have seen an increase in demand, but since the implementation of our VIA software, that is scheduling things more efficiently, and we are not needing to use our as-needed runs with our purchase transportation vendors as often as we have in the past. In regards to materials and supplies, we anticipated that bus parts expenses would increase. We did take into consideration the savings that we would see in this year because of our new bus fleet, but we are seeing greater savings than we anticipated, so that those are the unanticipated favorable variances. Do we have any questions in regards to our expenses?
For the purchase transportation,
Yep.
are they included in the VIA software, like their vehicles, or are those trips like sent separately? Or they get into the mix of that?
I'm gonna let Josh handle that question.
So they're using the same software we are. So the trips are sent to them, they use their own tablets or phones, but it's software on their phone, and it's sending it directly to them.
It's a different software though?
No, same software.
Same software,
Yep.
it's just on their phone?
Yep.
Okay, thank you.
Yeah, no problem.
Any other questions? So overall, expenses are 7.6% under budget, 10% over prior year, and 20% over fiscal year 24. So we are seeing our expenses grow and outpace the increases in our operating revenue. Our non-operating revenues are in line with budget, 9.8% over prior year and 16% over fiscal year 2024. And then the most notable thing to mention is mortgage reporting tax revenue is still performing very favorably and well above what we anticipated and well above what we even received in prior year. So that is a good source of income that we hope to continue to rise. Any questions in regards to our non-operating revenue? Moving on to our supplemental reports, again, this is another look at our mortgage reporting tax revenue. In the month of September, we did receive $864,000. Any questions?
So when you see the rates bump down, the mortgage rates, you'll see movement up, most likely with the mortgage reporting tax. people are buying, refinancing, et cetera.
So Oneida's the only one that went down, in their,
So for the month of September, as of writing up this report, we hadn't gotten a final number from Oneida, so we did use the 125 as the budgeted number. I'm not sure,
I don't have that number.
okay, I don't either, but we can get that for you if you want.
just there it is.
In regards to our investment report as of September 30th, unrestricted operating cash total approximately 12 million. Uninvested board designated funds were 4.2 million, with a total uninvested cash totaling 16 million. Our current investments as of September 30th, we had 10.1 million in operating funds invested and 14.6 in board designated funds invested. And we see, as you see on the board here, our yields are at 4 and just under 4%. Which, to Nick's point, this is the treasury bills he was talking about, and we will see these yields likely to continue to come down. And then lastly, our statement of cash flow, during the month of September, operating cash receipts totaled 1.3 million. Cash utilized for daily operations totaled 7 million, and then we did receive 6.5 in federal and state capital reimbursements. We do still have a healthy cash flow. Any questions?
What funding source of the capital reimbursements from?
It's federal and state.
Federal and state?
Yep.
Questions for Melissa? Good report, Melissa, and your team. Okay, with that being said, I have a motion. Yeah. Second, Luana. Any discussion? All in favor? Aye. Okay. Moving on, folks. Resolution will be, Chris is coming up for the TPA for prescription services. Next, resolution, and how appropriate, 3A, the pink sheet. I know you.
Thank you, Mr. Chairman. Good morning, everyone. This resolution is for a third-party administrator for prescription services. The contract will be paid for with operating funds. The request for proposal was publicly let on June 18th. 5 vendors were invited. In total, 22 proposal packages were downloaded. On July 14th, 2 proposals were received, and it was determined by our in-house evaluation committee that ProAct offered the most advantageous proposal. A full waiver for MWBE participation was approved by New York State Empire Development on this contract. Therefore, it is our recommendation that the board award the third-party administrator for prescription services contract to ProAct. This would be a 3-year term that would commence April 1st of 26.
Questions for Chris, Frank?
Do we receive 100% of the rebates?
Jackie, would you know that answer? What the rebates? We receive 100%.
I would have, I'll speak also, yeah, so I would have to confirm that for you. I believe it's an 85% rebate. I'm not sure if it's a 100% pass through at this point, but I can confirm that for you.
Would 85% be typical?
Typically, it's 85%. We're seeing, you know, now that there's a lot of, has it been used a lot about 100% pass through, so we're seeing some of that changing, but I can confirm that for the board.
Good question, Frank. So what will, Jackie, once you find it out,
Yep.
maybe you can just let us all know.
I can pass that through.
Okay.
I'll email the board.
If it is 85%, whatever it is, would that be guaranteed?
There is a guarantee that is attached to the contract, yes. So, and you have exceeded that guarantee consistently for the last several years with your incumbent is ProAct.
Okay, thank you.
Quite good question.
Were these scored on a certain template?
Yes.
against each other?
Yes, yeah, we have an in-house template that we use that's weighted.
Questions?
That means formula reserve compared, correct?
Correct.
Anybody else? Okay, may I have a motion? Robert, second. Julius? Any discussion? All in favor? Aye. Okay. Jason? Jason's gonna help us with resolution 3B. It's gonna be the minivan service. Jason, go ahead.
Thank you. Good morning, everybody. This resolution is for minivan services A. The contract was awarded by the board in July, but the low bidder at the time was found to be non-responsible in regards to their insurance. Our internal policy dictates that we go back to the board for an award to the next lowest bidder. So this contract will pay for the operating funds. The invitations bid was publicly let on March 28th. 26 vendors were invited, 6 of which were New York State's certified minority owned business enterprises, and in total 20 bid packages were downloaded. April 18th, 2 bids were received, the lowest responsive bidder being Empire DM. A partial waiver for MWBE participation was approved by the New York State Empire State Development on this contract, amending the total goal to reflect a 0.008% WBE participation. Therefore, it's our recommendation that the board award the contract for minivan services A to Empire DM for a 5-year term commencing February 1st, 2026.
Okay, Heather, just for your knowledge, you'll see in a lot of these resolutions, a lot of packages go out, okay? Most of the time, not a lot are returned. Okay, but everybody has that opportunity to bid that. And also, if you look at advertisement on the back of the blue sheet, you're gonna see where many of the counties are advertised in to encourage bidding throughout this whole region, which I think is important. Just wanted to give you an FYI there on some of that. Questions for Jason on this, Robert?
The prior company that had the contract, you said they didn't meet the insurance requirements, so we put on.
Yes.
Is there any outstanding claim against them?
No, they were awarded the contract, but since it hadn't started yet, they did not get it, but they were not able to reduce the insurance.
What's included in the minivan service?
I believe it's a set of.
Yeah, it's 4 Monday to Friday runs, and then it is one of the as-needed runs that we talk about. We use if we have work that day, which is a busier day than 1%.
Are these accessible vehicles or not?
No, these are not, but we manage that through the VIA software.
What's the seating capacity in the vehicles?
So they're regular sized minivans, so we, the seating capacity we mark down as 5. They can hold more, but we don't go more than the 5, just because of, you have people, some with canes, bags, shopping carts, so we try to limit how many people we put in the minivans.
I know that the stow regulations work a little differently. Do you guys still have to have a minimum seating capacity on these vehicles, or does that not apply to regional authority to collect stow?
I don't think it applies for, demand response vehicles. I think there's that fixed route component of more than 15 passengers, but I don't think it's on the demand response.
So we, like with our demand response, and it may be different for regional authority, but for us on either demand response or fixed route, it has to have the minimum seating capacity to collect the assistance. You guys collect your operating in a different way, so I don't know if it's different for the demand.
Could be, because of the formula fund, so
Yeah.
it could be different for us, we're allocated separately in the store.
What are the insurance requirements?
We can get those to you.
Yes, they are in the bid package initially when they're sent out, but I can send those over to you after the meeting, if that's all right.
Yeah, that's right. Thank you.
questions? Okay. May I have a motion? Julius, second, Neil. Any discussion? All in favor? Aye. Okay. Very good. Melissa, do we have anything else to cover in finance?
I just wanna mention that we'll be bringing the, preliminary budget or proposed budget next month.
Very good. Okay, with that, we're gonna adjourn for a little bit. Let's take a few minutes and then we'll reconvene. All right, folks, welcome to our October 24th meeting. We'll start with the Pledge of Allegiance. Janine, can you lead us in the Pledge of Allegiance?
I pledge
Allegiance
to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all.
Quorum is present. Next meeting is the 21st. Remember, that's going to be a little bit early because of Thanksgiving. Can't believe we talked about Thanksgiving. Darlene's going to lead us with a governance committee meeting. We'll have an audit and finance and then the board meeting. I have a motion to approve the regular minutes of our September 26, 25. Neil, second. Julius. Any discussion? All in favor? Aye. Mr. Tuff.
Good morning, Mr. Chair. Good morning, members of the board. Pretty productive month as we start getting into budget season. Certainly, we all know there's a lot of activity happening in Central New York, and certainly Central is making sure we're at the table of these topics and these conversations. So starting out, as we talked about last month with Brent and Steve's team, the outreach, certainly with the system redesign leading into BRT, we met with both OCC, and the following day we met with the city of Syracuse and their team. Neil was there, the engineers from the city was there to do just talk about the system redesign, the timeline, how it's going to flow into BRT and the construction phase of that. Certainly with OCC, they're a key turnaround point on the South Ave corridor of BRT. So we wanted to engage with them and make sure they're up to speed. Certainly some changes to our stop locations and setup on the campus. Some great conversation with President Hilton and his team to make sure that we're on the same page. There is a shelter that we did realize on Onondaga Road that we have to take a look at. It's actually their shelter. It looks a lot like our shelter. I think it was purposeful on their end, but we'll take a look at that because it is right in front of a residential home. With the city of Syracuse, the conversation was very productive. Certainly, we want to make sure that their construction projects align with our construction projects. I think the administration has been all about this Dig Once program, and we don't want to disrupt that if they reduce James Street or some other corridors that we're involved in for BRT. So both good conversations there. On October 1st, OCC, we were back up at OCC with the wire cutting instead of the ribbon cutting for OCC's Micron Clean Room Simulation. It was a great event. They actually had a student who participated in the program that was hired on by Micron as an intern for the summer and actually retires in December, or completes the program in December of 2025, not eligible to retire yet. It actually was already offered a job with Micron in their Virginia plant, and I would think hopefully is one of the individuals that comes back to Syracuse when that first fab is constructed. So all in all, good conversation. It's great to connect with a lot of our local legislative officials. As we had them all in one place, we kind of teamed up and hit a couple of them. Schumer's office was there as well. So all good conversations and leading into future things. Janine's pretty busy scheduling appointments for us in the next couple months to continue those conversations. Following up on Melissa's budget presentation, as we talk every year, NIPTA, we ban our resources and our forces to start advocating and lobbying for the budget, the upcoming budget for 2027, fiscal year 27. Across the board, we are looking to advocate again for a 15% STOA increase. It's something we've gone after the last couple of years. If you looked at our budget, our shortfall for next year is about 15 million. If you do the allocation, it's really probably like we need a 24% STOA allocation, but I think we went to the state with a 25% STOA allocation increase. It's not going to go very well. We want to be reasonable, especially given the current administration, the things happening on the federal government side, also seeing how it's impacting the state's budget. We're not going to, it's not a reasonable ask, but every little bit helps. But in that process, we are also looking to find dedicated revenue sources that Upstate is not awarded or afforded. As we're looking at the current funding sources, we receive a petroleum business tax, also known as the PBT tax. It's something you pay every time you fuel up your car. A percentage of that does come, Julius, I know you don't do that anymore, but it's something that comes to transit as, paying for the roads, paying for transportation, things like that. But as we see cars switching to electric and we see cars becoming more fuel efficient, that decline is happening in that petroleum business tax world. So we're seeing that we're funded heavily out of the general fund, and these taxes go to the general fund for transportation. So we're trying to find alternative tax revenues that would fund that to continue to fund our needs and our increases in STOA. So we are advocating for that. On October 8th, we met with the governor's office and the budget office in the same meeting. They seemed receptive of our ask. They understand some of the dedicated revenue sources that we're looking at. So we're going to continue to hit the ground running for that increase to hopefully continue to fund upstate transit and support the programs that we have. Some good news, what we're calling the ZET program funding, the Zero Emission Transit Transition Plan. So sometime last year, beginning of this year, we applied for the governor's budget. When she released her budget, put I think it was about $100 million in this ZET program for agencies across the state to transition to zero emissions technology, infrastructure investments, vehicles. So certainly as we talked last month and we're looking at some things, one of the biggest things we could use this for right now is the construction of the Oneida facility. So we are in the process of design phase. We've identified a location. We are going through the environmental pieces for a new facility in Oneida. As the chairman has spoken to many, many times about the flooding and the boats. I'm not going to jinx it, but we had an incident that happened several years ago, right around this time frame. So we know that facility is in dire needs of replacement and upgrades. So this funding will actually allow us to construct the building to be in lines with setting up for future zero emission transitions. So we're happy to see the award from the governor's office for $17.5 million, which is a good part of the funding to construct this building, which is about a $50 to $55 million project. So,
If we were in the ferry business out there in Utica, we'd be okay. We are. We have ferry.
Yes. The other piece, and one of them, certainly like to talk about our community outreach and things that we're doing in the community. This month, as many of us are here in pink, and we have the pink bus probably being pulled out front as we speak, participating in the breast cancer events and awareness here in Central New York, as we partnered with several agencies, private companies across the area, really Onondaga County, Madison County, and Oneida County. This month, we participated to have the bus being showcased at several events. So at the beginning of the month in October, there's an event called Riders Wear Pink. So on October 5th, it's a 50-mile bike ride out of Westmoreland to Sylvan Beach and back. The bus was actually, I think they call it the swag van. Terminology, I may not be right on that, but it's essentially the vehicle that follows along in case a rider has an emergency, has a situation, has a breakdown. The vehicle is there that they can either board, they can put their bike in, they can repair their bike. There's emergency personnel on there. So our bus, the actual pink bus, followed that tour. It was very well received. The photos and the interaction with the bus was great. People were excited to see it. We also, this past Sunday, the 19th, we did the Making Strides Walk here in Syracuse, which is out of Clinton Square downtown. The bus was a showpiece there with the upstate mammogram mobile. They parked us right next to each other, so we had a lot of activity and people taking photos there. And this weekend, we will be doing the Utica Strides Walk. So the bus will be leaving here out of Syracuse Sunday morning to drive up to Utica. We'll do the same setup. We'll do the walk, and then we will come back. So all in all, it's been well received. We have a lot of exciting things happening on other community fronts that we'll present to the board likely next month. But all good. One of the events, you'll hear it before the board meeting, but we're increasing our participation in the Lights on the Lake program. So in the past, we partnered with, and I don't think I'm stealing anything from you, Bren, right? In the past, we partnered with city parks and county parks to provide trips for the city parks and rec and some of the senior centers to individuals that would never or couldn't get to Lights on the Lake to be able to go enjoy Lights on the Lake with about 5 trips a year. This year, we've actually partnered with the YMCA in Lamar to extend that opportunity for individuals, for nonprofits and individuals that are in those same situations, but broaden it a little bit. So we will launch that for Lights on the Lake the week of the board meeting would be the first event. I think it starts on the 19th. That Wednesday is the first Lights on the Lake when it opens, but we have some press releases and some announcements to come out prior to that. So we're excited about that. We're excited to see the program expand and be able to give the opportunity to some community folks that have access to Lights on the Lake that normally wouldn't. From there, we're continuing our meetings as I talked about throughout the year. Our PM event will actually kick off in 2 weeks. Next week's about 15 of us, 13 of us will be at NIPTA for various reasons for the conference next week. So we delayed it another week. That's why we're not talking about it this week. Of course, the NIPTA conference and other things. So, any questions on my report? No? All right. So I'll turn it over to Jeff to come up first, talk about some things in the fleet and facilities room.
Thank you, Chris. Good morning, Mr. Chairman.
Good morning, Mr.
Board. Chris is gonna bring up a little, PowerPoint. Discuss about the CNG station. We have, Trillium just came in, and installed the newest, skid. If you wanna bring that up and then we'll show what it is.
It started moving stuff. There we go.
Yeah, this is the old skid. So back in 1997, they had these installed. These are all gas engines and compressors. And there it goes. So you can see how massive these are. And what you're looking at there in the back is the cooling portion where it cools the actual gas that goes through 3 stages to get to 3,000 psi up to 3,200 psi. So there's 3 of these, as you saw. There's another, and then this is that's the old one. New one's over here. Go to the next one. Here's the new one on a tractor trailer coming in. You can see it's a little bit smaller footprint. It still has the cooling in the front, and it's going to be all electric. It'll compress it. And this is what the new one looks like. It's much smaller than the other one. The other one had a giant cat engine, and then the compressors on the back side there. So this is actually going in. It went in last Thursday. This is the first skid. It should be operational by end of November, and then we'll start moving forward.
That's what I see when I came out of the gate. I see this equipment.
There was a lot of activity going on. So there's 2 more going to be coming in. I believe one's going to be coming in January and the other one's in February. So it'll be a lot quicker to go in as they go in. The driver barriers. Talk about that a little bit. We have ordered up some thicker glass for the barriers.
And there were a handful of concerns. We also asked, what are we missing? We got about 6 or 8 comments about concerns, and I will tell you that the service development team started immediately with what are the low-hanging fruits to accomplish those right off the bat. What can we fix today? So, got some of those paper schedules out in more locations and address some of those concerns already that we could. So it was a good feedback from the city of Rome. And then that really goes into why Paul is joining me at the table, which is the system redesign for the city of for the county of Oswego. So Better Bus Oswego is happening now, and we know that the template we set for, we didn't call it Better Bus Rome. Sorry Rome, we came up with that marketing before we got to you. But we know that the system redesign.
That's not a good fit. We know what happened there. Feel a little bit nervous there. We know the end of that story.
Let's cover that up. So we know that the example we saw in Rome is going to be what we are going to be able to see in Oswego as we set this one up. There we go. Okay. It isn't anymore.
TV's turned on.
Well, maybe we go back. Maybe we try this. We go back. Saw it. I know, right? Yeah, I can do it with yeah, sure. Well, yeah, so we can talk without this screen. Our system redesign in Oswego is very similar. You have the slides in front of you. You're good, Paula. It's very similar to the idea behind Rome and also Onondaga County, in that we are cleaning up our routes, we are increasing frequency, and we're trying to make things less confusing to the customer. That is your bullet point 1.
Okay.
Yes. So, yes, exactly. So we're simplifying routes, we're increasing our frequency, and we're making the system more user-friendly. And I have no option to send it to you, I'm sorry. So we're just gonna chat. But you've also been hearing me talk about public outreach. We've publicized all of our meetings on buses and social media. We went out on May 6th to SUNY Oswego's campus to talk to the students about the changes before they went away for the summer. On July 9th, we were on site at Towpath Towers and in Fulton and at Bridge Street and West 2nd Street, which is the Common Center in Oswego, to talk to the public. And they really gave us some good feedback. And that's what we're looking for in those sessions. We're looking for what do you see that we're missing so we can fix it before we come to the board with a final plan, right? So we made some revisions to both the Oswego and the Fulton proposals. And on September 9th, we went out again for our 3rd round of public outreach to SUNY Oswego and Fulton Mills apartment complex, where we have multiple riders there, and they had some additional questions for us. So again, we've had a ton of public outreach and some great conversations with both the city of Oswego and the city of Fulton to make sure that everybody understands what we're doing. And you can see I can't see, but y'all can see on your one-pagers that both the city of Fulton and the city of Oswego, those little blue dotted lines are what we are taking out. So again, we've really streamlined the service, made it more straightforward, increased the frequency in the city of Oswego to Walmart specifically. That is our highest ridership location. So really worked on how do we get people there quicker. And we consolidated in Oswego, we consolidated 7 routes down to 3. We've got a 45-minute frequency. And to Bridge Street, and then we've got a 90-minute frequency to some of the apartment complexes. And then in Fulton, we eliminated the variations in routing. We eliminated some areas that didn't have much boarding at all. If they had, one or less on average per day riders, we eliminated that service and increased their frequency to 80-minute frequency. So now I'm going to hand it over to Paula for what she did with the analysis.
Thanks, Brandon. Good morning, everyone. Okay, so let's just give it a second to see if Paula's going to get it, because otherwise what I have to say is not going to make any sense if I don't have a
A very happy department. I want to transfer into this department.
Come down and join us anytime.
Nick,
We have fun.
Those folks.
Yeah. Yeah. All right, this is a good sign. We have step one. No, it's gone. Oh, so skip through onto page 7.
Thank you, everyone. Thank you for listening. Analysis. Yay! All right, here we go. So, I'm here today because we are required per Title VI of the Civil Rights Act of 1964 to evaluate the impacts of service and fare changes on passengers who are transit dependent, specifically minority and low-income populations. So, for the Oswego County system redesign, before we can actually go to public hearing, I have to inform you of the results and findings of this analysis. So, to give you an idea of what we're looking at as far as Oswego County demographics go, they have an 8.4% minority population, and if you want to compare that to our system-wide, so all 5 counties combined, we actually have a 20.3% minority population, so much less minority population in Oswego County. As far as the low-income population, we're looking at 24.9% across Oswego County compared to our system-wide average, which is actually 24.6%, so very consistent there. Okay, here comes the fun stuff. So, to give you an idea of how I do this analysis, this is a map showing you there's this green outline. You might remember something similar to this when we worked on the Rome Move project. This is a 1/4 mile buffer from the proposed new service line. You're familiar with the service already. There's the 17, the 18, and the 19. And then, of course, we have the dashed lines on the map representing service that was discontinued. So the idea here is to give you an idea of the area in which we expect customers to be able to walk into our service from. So if you look at this, and you can see in the kind of center top area there, there's a dash line going outside the green boundary. This is an area where we're no longer providing service, but I have been informed that it will be covered by Oswego County Public Transit. You'll be able to help people in that area if they're unable to walk down one of our stops. There's a couple concentrations of minority and low-income census block groups, which are represented by that kind of yellowish color. And everything that's in the gray is a low-income concentrated group, which means the percentage of low-income persons in that area is above the county average of 24.9%. So this is just to help you understand that as we do this analysis to make sure that we're not negatively impacting minorities and low-income persons more than their counterparts. We want to look at the whole area and see where those concentrations are close by. So all the details about how this analysis is conducted will be in the full report that you will receive in December. So overall, looking at this, there's a limited impact to customers with the service change because even in the areas that we're kind of discontinuing service, they're still walkable to existing service, or the new existing, continuing service, sorry. Find a better way to put that. So in our fun with math portion of the presentation, our Title VI policies have us comparing the percent of persons affected, so minorities to non-minority, and low-income to non-low-income. We take the percent of persons in the affected area, do a subtraction, and end up with the difference. The difference in both cases is less than 30%. They're actually negative because there are more non-minority and more non-middle income persons affected than there are the reverse. Therefore, it is not a disparate impact to minority populations, and it is not a disproportionate burden on our low income populations, which is good news. That's what we want. So, very responsible service change in Oswego. Okay, Fulton. So, in the Fulton area, you can see again, same concept. The green is the buffer of the new service. There are a couple, there's one area really to the south there that is no longer going to be disturbed by our current service unless people want to walk to it. But we did note that there was very limited ridership in this area. There's less than one person per day at any stop in that area. And there was no feedback received from anybody in that area regarding this change. This was from West First Street to Curtis Street. So, although it looks like it's a giant area that's kind of cut off from our service, again, I'm assuming they would be covered by the Oswego kind of public transit. But yeah, so the goal was to streamline Fulton, because Fulton kind of went all over the place and it had a very inconsistent schedule. So this is going to allow for more consistent routing and address to transit. Next, please. Okay, back to our fun with that. So again, looking at our minority and low-income persons will not bear more than their fair share of the impacts of the service changes, because once again, there's a much higher concentration of non-minority and non-low-income persons that would be affected by the service change, according to the data. So we would consider this a very responsible service change with limited impacts to our greater community, right? We're still going to be serving the customers, and the customers need our service the most. So feedback from the community and our operators informed the final system design. Like Brian was mentioning, we went out to the community, we went out to the operators and supervisors, we took their feedback, we made some changes, we went back again, and we got more feedback, and that's how we arrived at the final system design that we're proposing today. So the redesigned system will feature improved and simplified routing that will continue to serve Oswego and Fulton communities with greater frequency. And the Oswego downtown transfer point will be relocated from Bridge Street to East 3rd Street and East Paducah Street, which is providing a safer and easier transfer between lines going forward. So what are our next steps? Okay. So next steps, we need to continue our public engagement. So we're proposing to hold public hearings November 18th and 20th. After those public hearings, we would evaluate the public hearing feedback and make any necessary changes based on that feedback. We would then complete the service equity analysis with the public hearing, and that would be a nice big report for you that I would present in December with a tentative launch date of the new system in January 26, 2026. Everyone's been very quiet. Any questions? Okay, so the public hearings will be held at the Oswego City Hall on November 18th and at the Fulton City Hall on November 20th. And we've made sure to align the times of those meetings to align with bus schedules so that people will be able to attend. I believe it's 4:30 in the afternoon is what we're looking at right now.
Both locations are on bus routes.
Yes. Yep. And that will of course go up in a public notification. We will do our social media, but there's also the official
newspaper postings.
Yeah, legal notice.
Yes.
The official legal notice will go out, and that will be handled by marketing. Any other questions?
I got one.
Oh, okay.
So it looks like it's kind of severing east and west. Or am I reading this map? So,
It's just split into a western line and an eastern line, but they actually continue to run together.
so I have a 1 seat ride.
Yeah, so every 45 minutes you're going to come to that common center, so past hours, and then it will continue on around and back.
And we do the interlining on purpose to make it so that people can have
You said that's 45? I thought you said it was 80.
the whole thing.
You said every
Do I
45.
my number?
No, I think you said every 40 minutes you'll be coming to the common point.
So that time.
So you'll
Yeah,
cross
in the
every-
middle, you cross
Yeah.
over.
Oh, that's right.
Yeah.
Sorry.
That's
I'm not the service planner. I'm the equity analyst. Sorry.
Thanks, James.
You answered my question.
Okay, great.
Any other questions?
Thanks so much.
Thank you. That concludes our report.
Item finance committee. In-depth presentation on our financial position, which is in a good place.
No, you're good. We just.
Oh, I got that. So the financial, statements were good. If you look at our expenses, our revenue, reporting tax. Question?
Yeah, when Midland Ave was, doing the streets and everything, the 300 block, are that route gonna stay the same? Like we got it now?
I don't know. I don't have that answer now, and I don't know.
It is not gonna stay the same, but I don't have that information in front of me. I would say the best place to look, we can send you the link to centro.org/better bus Onondaga.
Yeah, because I know you're doing the 300 block of West Kennedy, and that's been rerouted.
Now, when we have construction, we, detour around until the construction is done, and then we will obviously, when the construction is finished, we'll put it back where it was. But with the system redesign, we may see, that's where we may see changes.
You've done everything, done the streets and everything.
Right.
No problem, it's great. So with that being said, I have a motion for the financial statements. Llewellyn, second. Any discussion? All in favor? Aye. Also brought forward was our TPA, prescription service. Chris, did his homework on that. And, resolution 3A, recommendation was made with the committee that, staff recommends a 3-year term for ProAct Inc. I have a motion, please. Joyce, second. Darlene, any discussion? All in favor? Aye. Also, our minivan services. Jason brought up, resolution 3B. Recommendation was to award contract to Empire DM Inc. for a 5-year term commencing February 1st. I have a motion.
Can I bring up a point about this?
Sure.
Not to be a dark cloud, and we've talked about this quite a bit. I hope we're on the path to reduce the amount of contracted services that we use. Francine is not here today. But I heard something in the presentation, thank you, is that the one bus company that had worked, the one paratransit company that was on the contract, their insurance policy wasn't valid. Okay. And the good news is they weren't carrying any passengers. Okay. That points out that we're losing control when we contract this stuff out. And you pointed out that they signed indemnity agreements. However, I one of the buses today, and right on the side it says authorized Central. My name is on it, and somebody gets hurt.
Yes, I think it's well said, and I think, one of the things that was heard in the past was labor.
Yes.
Okay, but I think we're all in favor of that. Okay, I think we are. I think Tina has made significant points over the years. Okay, so noted. Okay. Do we have a motion? Robert, second. Darlene, any moving on, I always enjoy the pension discussion. I think we all do. It's kind of interesting. And it's amazing over the years how much, we've over $100 million in those funds. I mean, it's a lot of money that's being managed right now. But the returns have been good, and we've had a good market, but I'm sure it's going to be this. But let's go advisors present a detailed overview regarding the authority's returns, allocation, as well as in-depth overall market decision. And that was good. Any motion on that? No, just FYI. Very good. Okay. Old business, ladies and gentlemen.
Well, I guess old business we talk about, is Southwest Community, it's quite old business. Having celebrated the anniversary coming up. Next year, and you'll be there.
I sent an email to the board to gauge interest, if anybody interested in attending the table. So, keep an eye out if you want to talk after the meeting. Reach out to this.
And I want to know more about this. We have, this is kind of like, a thing that I'm definitely follow from the beginning. So, follow that system. And that gives central also that.
Yeah, exposure, absolutely. It's important. Any future business? At this point, I'd like to motion for executive session regarding consolidated ed. Motion. Joe, second, discussion, all in favor? Thank everybody for coming today. Have a great weekend. Okay, at this point, we are gonna move for adjournment. We're coming out of the executive session.